Good afternoon, everybody, and welcome to our weekly webinar. As the noonday gun sounds in our Cape Town studio, we're thrilled to kick off yet another insightful webinar session. I'm Neil Peterson. I'm the founder and content-in-chief of Real Estate Investor, South Africa's premier independent real estate news, content, and education platform since 2007. And at REI, we're deeply passionate about serving the South African real estate investor and the South African real estate and business community through our digital platform, rei.co.za, our monthly digital magazine, Real Estate Investor, which you can see in the background, and REI's virtual webinars and in-person events. And today I have the pleasure of serving as your host and moderator for our investment webinar, and we're really thrilled to have you join us for this very insightful session. And today's topic is navigating change, post-election outlook for South Africa's property market. And before we delve into our discussion, first some housekeeping. I extend a warm invitation to all our esteemed attendees to actively engage with us during this webinar. Your participation enriches our dialogue, so please feel free to ask any questions you may have for our panel, who I will introduce to you shortly. Please utilize the designated, it's a Q&A box. It's located on the bottom right-hand side of your screen. And remember, this is not the chat box, which is reserved for general comments. So we welcome any ideas there on possible topics going forward in that chat box. But in the Q&A box, we look forward to your questions. So rest assured, all of your questions will be addressed both during the Q&A panel discussion in our final session of the webinar. Recordings, I get this question quite a lot after today's webinar, will be accessible post-event via email if you have registered for this event. The webinar recordings are also accessible on the rei.co.za website under events, and it's on the home page. So let's move on to the heart of today's webinar and our topic, navigating change, post-election outlook for South Africa's property market. And today we're going to delve into the intricate intersection of politics, the economy, and the future prospects of the real estate landscape here in South Africa. And as the dust settles after the elections, our expert panel will provide invaluable insights and analysis from their perspective on how political shifts and economic policies are poised to shape the South African property market. And we'll discuss key trends, potential opportunities, challenges, and also strategies to adapt and thrive in a changing environment. So whether you're an investor, developer, an industry professional, this webinar is your guide to understanding the evolving dynamics and charting a course for success in the post-election era. So, without further ado, please let me introduce you to our esteemed guest panelists today. First up is Evan Roeder. He's the founder and CEO of Roeder Publications and Media. Evan, welcome to you. Would you please introduce yourself to the audience? You just need to unmute yourself, Evan. I think you've muted.
That would help.
Yes, we can.
I'm of course the old bully on the panel. I started researching the property market in 1987, no, even earlier. But I founded my company in 1987, November 87. So you can see I've got quite a number of decades behind me. And the innovation I brought to the property market was that I looked at the property through the lens of an economist. In other words, I look at property over time. How do the crucial variables that make value, that create value, how do they move over time with one another? And I can tell you now, the short and the long of it is that it's economy stupid. The economy is crucial, and of course with its interest rates. Those two are for all property types, but more so for residential property types. Interest rates are crucial for residential especially. But in general, it's the economy. And of course, the other variable to watch out for is oversupply. right? So if you have a serious oversupply, as we now have in the case of office buildings, well, then even then any growth in the economy will take years to filter through, filter down to the office market. Right? So in short, I've created over the years, I've got decades of time series, as we call it. In other words, that is, as with the consumer price index, the CPI, it is data in chronological order, going back about 3-4 decades in some cases.
Wonderful. Alan, it's wonderful having you here and we look forward to getting your insight and I know we're going to get two different views here. You know, we're going to get the positive side and the negative side, and people don't like to listen to reality sometimes. But welcome to you, and it's always wonderful having you here. Next up is Renier Crick. He's the Managing Director of Combined Finance and Sentinel Homes. Renier, welcome to you. Great having you here today. Do you want to introduce yourself to the audience?
Hi, Neil. Thanks. Yeah, pleasure being here, sharing the stage with you and Erwin. I'm an attorney by training, but I spent, I think, in total of 2 days in practice before I moved into residential property development and then started a property finance business, Combined Finance, about 12 years ago. Out of that grew Sentinel Homes, which is the first open market provider of installment sale home loans in the country. It was only really possible, this business model, very recently due to some changes in the legal and tax landscape. And we obviously seized upon those to start the business, Sentinel Homes, in 2018. I've previously heard that it is the function of the entrepreneur to be unreasonably optimistic. And that's perhaps one shortcoming that I would very royally admit to today on this podcast. And so I think that's the balance you were alluding to earlier, because I think Erwin has a couple of views that are slightly dimmer than mine. And I look forward to having a spirited discussion about those potential differences of opinion.
Wonderful. Great having you here as well, Renier. And so, yes, we've just had an election now, and there's a lot of uncertainty as to which way this thing's gonna sway. I mean, you've got the ANC, you know, they're going to choose between a coalition and who the coalition partners are. So let's kick off the discussion, gents, and let's talk about what do you see are the anticipated political changes following the elections of last week, and how they might impact the property market. And let's start off with you, Evan, and your views on that, and which way these policies could swing.
Well, first of all, I must admit I don't have a crystal ball. When it comes to politics, it's very, very dangerous and very difficult to make any forecasts or predictions. Having said that, I think there's a good news and there's bad news about the elections. The good news is that we now, for the first time, we have the major party, the ANC, democratically shown that the voters don't like their policies.
Renier, he will log back in. I want you to maybe just give your views on that particular aspect. We're talking about what are the anticipated political changes following the recent election, how they could impact the South African property market, and your views on that. I'm sure Erwin will log in now a little bit later. We'll catch him.
So I think the prime thing about any market, and the property market has no characteristics that really should distinguish it from the other potential markets like equity markets or bond markets, as far as this particular concern is concerned, is that markets like stability. And so perhaps if we have to take one downside of the election result, is that perhaps the ANC slipped from grace a little bit too suddenly. From a market point of view, if we wanted a flourishing market, consumers don't like uncertainty, they don't like choppy waters, and so it might have been a preferable outcome if, you know, the change happened a little bit too slowly. However, if we were to look at this from the positive side, then there's no real mechanism in politics for accountability to arrive in South Africa. The most effective mechanism is via the ballot box. And so I think voters have very clearly signaled to the ANC that they don't like the way that the country is being run and that they would like for there to be change. Obviously, the disconcerting thing is that if you look at the parties that have anti-constitutional manifesto, being the EFF and the MK party, they have about 24 to 25% of voters voting for them. Now, those may be votes of despair, if we can borrow some terminology from the USA, where people say that some people, vote for Trump as a way of signaling their despair with current circumstances. People might not earnestly hold as their opinions the key tenets of those parties, but nevertheless they're giving voice to actors that are on an anti-constitutional path and want to do things like nationalize the banks and all of the land. And so that bit of leftist populism there is a little bit disconcerting, I think. And I see that we have Bernard Wissa on the call, and he's already asked a question about the possible MK, EFF, ANC coalition. I think that's exceptionally unlikely given the reports that we're receiving in the news, where it remains possible, and obviously that would be taken very poorly by the market. Nevertheless, we must also not forget that in any country where there is a proportional representation system, such as the one that we have in South Africa, it eventually ends up in a situation where no party can govern without a coalition. And so the point that we've arrived at now, where some form of coalition, whether it's the coalition light option, the confidence and supply arrangement, or a full-scale coalition, is necessary for the ANC to govern, that is actually a sign of our electoral system and our political arena maturing. And I think that should be welcomed. And obviously, we must also consider the fact that, Mr. Ramaphosa is now in his second term. He doesn't need to fight for re-election, either as president of the country or at ANC once again. And so if there was any reform agenda that he earnestly wanted to implement, which I think is the case, then at this point, I think we're going to see some unpopular things that are potentially politically unpopular, but that are good for the country coming to the fore. Like, for instance, entering into a confidence and supply arrangement with the DA. That would have been unconscionable just one election ago. For Mr. Ramaphosa to do it would have made him too politically vulnerable. But now it's potentially something that he can sell to the cadres in the ANC and the coalition partners. And I think that is probably something that is going to be positive. If we have this more centrist governing regime, no matter the precise mechanics of how that works, we can at least look forward to more accountability in state structures, so less chances for corruption, because the parties to these coalition arrangements will likely want to trump each other, in the ballot box with a view to the 2029 election. So they'll want to show the mischief of the other party. Another thing that will happen is probably that the ANC will realize that they'll need to show some tangible benefit to their voters to stop them from engaging in voting for or voting by virtue of their despair when election season does arrive. And so I can, if I were to look at the property market, I would say that affordable housing is one thing that, definitely would be a tangible benefit, in addition to increasing and rolling out the RDP program, which is a vast achievement of our country since 1994. If we can get affordable housing going, I think that's a tangible benefit that most voters will feel. And so I think that is going to definitely be a policy priority of the next administration, because it serves everyone. It's already started happening in the Western Cape that developers are starting to get all sorts of queries and qualms and all sorts of conditions related to affordable housing put into their development conditions. The way in which it's being done is not entirely pro-market. It's a little bit sort of ill thought out. And so there will probably be some teething problems as far as that's concerned. But I look forward to it. Having South Africans housed and having people own their homes so that they have a stake in the economy definitely in the long run is beneficial for the political gestalt in this country.
Okay, great. It looks like you're running solo at the moment, Renier, because we've lost Erwin. We hope that he's going to come and log back in, and we've got our technical guy on that at the moment. But I think your views are very important, because I think a lot of people kind of want to get a view of what's going to happen going forward. You've set a nice sort of scene over there. Erwin, you're back. I'm glad to see you. And well, what we're going to do, Erwin, Renier has set his scene in terms of those anticipated political changes following the elections. I'd just like to get your view and then how you foresee economic policies evolving post-election. Maybe you can give us some.
Of course, we all hope that should a coalition, I think the most likely scenario is that the DA will form, or the ANC will form a coalition with the DA. I think everybody agrees on that. Maybe the IFP would also be part of it, who knows. So thinking about it logically, the DA in theory would have a more moderating influence on economic policy. By moderating, I mean more private sector oriented. Yeah. And the big question is in practice how that's going to happen, because as we know, I said before, I don't know whether I was heard, but in 1996, F.W. de Klerk walked out of the then government of national unity because the ANC just ignored him, or ignored his party's contribution. Now, I presume that any coalition would be based on a so-called watertight agreement beforehand. I don't know, as an attorney, whether the Rainier would say that that is of any practical value when it comes to politics. He's moving his head sideways. So, and of course, we must consider that we have in South Africa, we've had a very, very bad experience with coalitions in our municipalities. So, it's not a given that the coalition is going to be the be all and end all and will save South Africa. That is a big question mark, to what degree people will act. The politicians will be mature people and give and take. But let's assume, for the sake of argument, that in fact it would work like it does work. Coalitions do work in Western Europe, for instance, where they've got a lot of experience in Germany, in the Netherlands, in Belgium, just to think of a few of them. They never have a government without a coalition. So,
so I think we've set the scene over here. But I think now, most importantly, what is the implications either way that it's going to have on property investment, on development? Because we've got a massive housing shortage. And you actually alluded to the affordable market earlier on. And what are the sectors in the South African property market that you believe could be affected by the post-election landscape?
So, I mean, I firstly need to speak about residential property, right, Neil, given that that's my primary sort of engagement in the property market. As far as residential property is concerned, I think there's a very important paradigm, at least that I like to use when it comes to residential property, which is that my grandfather bought one house with his starter salary, and he was wheeled out in a wheelchair 50 or 60 years later, having raised 7 children in that home. So his starter salary bought one house, and he lived there for his entire life. That is virtually unheard of in today's property market, especially for the section of the market that utilizes funding in order to procure property. And the reason is that property prices grew much faster over the long run than nominal wages. And so on your starter salary, you can't afford to buy the property that you'll grow old in. And so people trade up and down. And the question is, when do they trade up and down? And the answer to that question is that obviously people trade up and down when their life circumstances change. So you get married, you buy a house, you have a child, you buy a slightly bigger one, and then you have a second one, and because you're earning more money, you buy a townhouse with a lawn, or a big house with a lawn. And then once the children are teenagers, you realize they need a separate space somewhere, so you buy an even bigger house. And once they've left, you realize you don't want to clean all of this, so you move to a smaller one. And the fact of the matter is that those changes in life circumstances have absolutely nothing to do with whether there's an election, whether the interest rate is high or low. It has nothing to do with most things that it may be loosely connected, but there's limited causality between what happens in the political and economic arena as far as people's changes in life circumstances are concerned. Your teenagers will go out the house even if interest rates are high, for instance. So what happens is that the reason we see oscillation in volumes in the residential property market is because buying behavior, unlike the changes in life circumstances that create a demand for property transactions to occur, whether those transactions actually occur is related to the political and economic climate. And so when there's an election and there's uncertainty in the market, people might hold back from listing their properties for sale because they think they won't be able to achieve a price. People might hold back from making such a big capital expenditure because they're afraid, fear being a bigger motivator than greed. And the same thing applies to the interest rate cycle, right? When interest rates are high, people don't buy property, when in fact it's the better time, because then you know you can afford it through the cycle. People wait for the interest rate to come down and then they buy property because then they feel safer. So what's happened in the background in the past 18 to 24 months is that people's life circumstances have been changing, but those changes in life circumstances have not ossified into transaction volumes in the market. Transaction volumes being broadly down by about 25%. And so what that does is it means that there is pent-up demand. This pent-up demand thing that we read about sometimes in property publications is not a figment of people's imagination. It arises by this mechanism that I've just tried to elucidate. And so there's a lot of pent-up demand in the market by virtue of people, having changing needs as far as their primary abode is concerned, that has not turned into volume. And the question is, what signal is going to be necessary for that to go into the market, for that pent-up demand to become the opposite of pent-up? And the answer there very clearly is that we need a good outcome for the election. So we ideally would not like to see the ANC, AFF, EFF coalition. And I don't think it's likely, but we also don't want to see the NK party being in, because that makes Mr. Zuma a kingmaker. We don't want that again, as far as the markets are concerned. And likely we need the interest rate signal as well. I think it's an experience of the market that inflation has been stickier than we had previously anticipated. And Mr. Kganyago and his MPC have made it very clear that they're taking a very hawkish look at this inflation number, and they would like for it to be at the midpoint of the target range before they start adjusting the interest rates. I think much of that is just trying to engender expectations among consumers. They might start moving slightly earlier. And given that we have about a 5% reduction in the petrol price this week, we're already seeing that there might be some signals that may lead to inflation numbers being lower. I personally am still very hopeful that we'll have the interest rate signal by November, and then coupled with, on the assumption that the ANC confidence and supply type thing, perhaps with the IFP, is the most likely, I think we can expect for the market to make a very sudden inflection in November when that interest rate decision is taken. But if that interest rate decision, say, comes in the first quarter or the second quarter of next year, I think that'll have the same effect. We're hoping that we won't suffer any instability in the political arrangement before that interest rate signal arrives. So preferably, I would like for that interest rate signal to be earlier rather than later, because, things might go pear-shaped as far as the political arena is concerned very shortly, because given that the norms in politics that are associated with these kinds of arrangements are not so very fixed in South Africa yet. In Belgium, it's part of how politics is done, so the norms exist. In South Africa, we still need to fix those norms. It's the first time now that we have this situation where the majority party needs to rule with a confidence and supply agreement at the very least. And so the political norms, how these people will relate to each other and what is kosher and what is not kosher to say or do or whatever, that's still going to be fixed. And so there may be some political instability. We're definitely going to hear a lot of noise also in the press that might impact sentiment. And so the inflection might not be quite as severe or quite as clear if the interest rate signal comes too late.
Great. Thanks for setting that scene. Welcome back, Evan. You said right at the outset, economy, interest rates, and oversupply, and you mentioned the property market. So what are the specific sectors within the property market that you believe that will be affected by post-election landscape? And, maybe what strategies can you start recommending? I mean, with these uncertainties and can we still capitalize on emerging opportunities in the property market?
Well, it depends on whether you are an investor or a developer. From an investor's point of view, what any financial advisor would say to you is, given the environment in which we are in South Africa at the moment and uncertainties, you should be conservative in your financial planning. And that would mean, in the case of property, if you're going to buy a house to rent, be sure that's in a good location. I would favor middle-class locations. The reason why I'm a bit skeptical about lower income areas is, yes, your initial income yield would be much higher. That is true. But that goes with a much, much higher risk. And given our forecast of what will happen to the economy over the next 5 years or so, our forecasts are pretty pessimistic. In fact, just about all economists of note are pessimistic about the medium-term future of the economy, for the economy. Given that, I think it's a given that you must be conservative and rather invest in areas where you think people will retain their jobs.
But
Yeah.
I think, sorry, Owen, I don't want to interrupt you, but I mean, let's just elucidate what middle class means in terms of residential property, right? Because I think the average person on the call might expect for middle class to be a slightly higher price bracket than in fact it is in this district.
Yeah.
So maybe just define that, because I know in affordable we're talking up to what, 700,000 or something, and middle class is almost 700 to what, 1.5 million. I mean, am I right? And I think anything beyond 1.5. Yeah, so 1.8, we're talking about almost upper end, aren't we?
Well, I want to be vague on purpose. Economists know about the left hand and the right hand. So, the more important is to say to yourself, given, you see, the possibility is maybe you should have started with a medium-term forecast for the economy. Given a very reasonable forecast, a baseline forecast of what will happen to the economy over the next 5 years, irrespective of the negotiations, the political negotiations, is that the growth rate is going to be very low. In fact, from about 2014, 2015, thereabouts, South Africa's GDP per capita, in other words, our economic output has been declining since about 2015. Geez, I'm old, eh? And I expect that to continue. And one of the reasons I'm expecting that to continue, for what it's worth, is that our fiscal cliff that is awaiting us. South Africa's been living, we've been living beyond our means for a long time now. And every year when the National Treasury makes its forecast, it says, okay, 3 years, 4 years from now, we will solve the problem of the fiscal cliff, right? Fiscal cliff is a fancy word, by the way, for countries spending too much without the means to support it. And that's what we've been doing for a long time now. So in other words, the debt of the national government has become so high that it's a reasonable scenario to suggest that in a few years' time, we will be forced to approach the IMF and to say to the IMF, sorry, but we need your help. And of course, the IMF is not Father Christmas, so the IMF will say, well, fair enough, but the following will apply. You've got to adjust your financial, your budgets and your philosophy as follows. In other words, we will have to tighten our belts. And you can imagine what that will entail. It will entail rising interest rates, and it will entail rising unemployment. You'll have to have pain, severe pain, before you can get before this patient will get better. That's how it works when you call in the IMF. And even if you're going to do it without the IMF, you'll still have to inflict pain on your consumers, on your right. That brings me to the office property cycle. What you see here is that's the fruit of 40 years of research. And you'll see there what you're on the graph is the real office rentals in Johannesburg. Up to about 1982, thereabouts, it was in the CBD of Joburg, and thereafter it's decentralized areas for office buildings, right? The real rentals, real market rentals. And you can see there's a long cycle there. There was a valley in 1960. There was a valley in 1976, 77. There was a value there in 1995. And there's another valley in 2005, thereabouts, right? Thanks for showing that. And then you'll see there are two scenarios, forecasting scenarios. The blue one is the baseline scenario. That's based on the expectations of a panel of economists. So it's sort of the generally expected scenario. Economy growing at something like 2% say, per annum, not more, something like that. The other line, the other forecast, the black one, is what we call the IMF scenario. It's not because it's by the IMF, it's by Ruder, but it assumes that we drop over the fiscal cliff and we'll have to call in the IMF, right? And you can see
what I'm going to do is maybe ask you to probably go in and out again. So maybe you can just, exit and then come back. And then I'm going to actually ask Renee just to comment on what Evan was saying there in terms of those stats. What are your thoughts around that?
So I think yesterday when we spoke briefly, Neil, I also said, I like the Jan Smuts quote, which is that in South Africa, the best or worst never happens. So there is definitely a lot to be pessimistic about as far as the economic outlook is concerned. But we must remember that generally what goes down must come up in South Africa, right? And it works like that. That's why there is an economic cycle. So in the doldrums of the economic cycle, which is hopefully where we are now, it's easy to be pessimistic about the future prospects. But we must remember also the old Yiddish saying, which is that to a worm in horseradish, the world is horseradish, right? We must be careful that our current negative situation doesn't color our outlook too much. So as I said, I confessed to my unreasonable optimism. I personally think that we must remember that the Thabo Mbeki years and also the Nelson Mandela years, where granted with significant tailwinds as far as the international economic climate was concerned, the country did achieve quite significant GDP growth. And so it's not as though we've never under an ANC government had significant economic improvement. And I think that given the fact that the ANC will now be driven to firstly produce tangible benefits to the electorate, and secondly, given the fact that the adults are still in the room as far as the ANC is concerned, right? We still have Mr. Ramaphosa, who himself is a businessman, and we have several of the sort of more centrist intelligentsia really running the show there, and also in government. I think, and given the fact that, they'll now have a coalition or confidence and supply partner, which will have to approve their budgets and whatever, and further given the fact that, there will be some accountability in terms of look-through in the government, I expect that we can see things happening. Obviously, the private sector needs to assist and mediate. If we can use the Eskom example, load shedding obviously is a tremendous threat to our economy and to our country. Not only is it a big PR problem because it makes us the laughingstock of the world, it impacts on our tourism industry, etc. It's also a big problem because it sheds jobs and it hampers economic performance. But at the point now where everyone said, yes, it's just for the elections that Eskom is burning diesel, but it's it's almost more than a week now after the elections and we've still not had any load shedding. So it seems as though the load shedding problem is starting to be solved, and we must give credit where credit is due, right? The ANC government has stepped up. It's not been a clear path to it. It's by no means been what one will call efficient. It's not the way that it would have been done, say, in the first world, but credit is due. And secondly, the private sector simply stepped up and filled the void that wasn't being filled by government, and is probably likely going to continue doing that. And the unpopular things that are necessary to unlock that process even more, the politically unpopular things are now possible for Mr. Ramaphosa if he has a coalition partner, because he can blame it on them, firstly. And secondly, he doesn't need to seek re-election again, so his hands are open. And so I have tremendous positive sentiment. I think, that it's not nice that it slipped, but the ANC support to the extent that it slipped, but I think that it does create tremendous opportunities for us. And I think Erwin is correct in that, if you just take the trend lines and you consider what the likely economic performance is, and as you said, we've had economic growth, but yes, the GDP per capita, is declining. He's correct. And there are other things that are worrying, like the fact that we are rapidly deindustrializing as a country. When you have a large amount of potential job seekers who have low skills, then in fact you would like a very industrialized economy, or a very agrarian or primary sort of sector-based economy where you can create jobs for those people. And And the problem is we are rapidly deindustrializing. Now, that's not a problem that's unique to South Africa. That's a problem that also exists elsewhere in the world because of the role of China and globalization and whatever, and the impact that that has had on manufacturing worldwide. However, if you ask Owen, where is the prime investment opportunity in the moment in the property industry, he'll say that it's probably in industrial property. We spoke about that yesterday. So
Absolutely.
we're rapidly deindustrializing, but industrial properties are outperforming. So once again, it's that situation of, the guy who's lying with his head in the oven and his feet in the freezer, on average is all right, or might be slightly in danger. But but if you look at the head and the feet, then, he is actually suffering quite significant distress. So the average statistics that we see on whether it's residential property or office property or industrial property or retail property, those numbers are averages. And in an averages in a country that is exceptionally geographically and demographically diverse. And obviously we need to account for that. So the function, I think, of property investors, developers, etc., is to find those areas where a particular strategy is suited. Say, for instance, the Western Cape is a large beneficiary of huge amounts of semigration that are coming from other areas in the country. That is doing two things. It's creating a high demand for new property in the Western Cape. So if you're a developer in the Western Cape, you better get your ducks in a row and start producing stock. But what also happened, and we've seen this in the statistics, is that now the properties in Gauteng are starting to look cheap. So people are changing their tune. I can go to Cape Town and I can buy something for 3 million that isn't great, or in the east of Pretoria for 3 million I can buy a mansion. And people are starting to elect the second option. Potential semigrants are starting not to get on the plane because of the relative property value. So we mustn't, once again, think that because semigration has been such a large and impactful trend in the residential property market, but also impacting on the other forms of property that we study. I mean, if people move to the Western Cape, then they also shop in the Western Cape, right? So someone needs to build a shopping center and also needs to supply the services that are necessary, which impacts on the office property and also on industrial property downstream. But we mustn't assume that semigration is going to continue at the current pace, because supply and demand is the law of the market, and as the markets that are the semigration, the area that people leave for semigration are becoming more and more attractive, the trend might in fact turn, and I think that is something that one should study carefully. There may be some opportunities to see there. The other interesting thing is that people are voting with their feet. So generally in the South African residential market, about 4 or 5% of properties are bought with investment in mind. At the last measurement in the Western Cape, that's about 1 in 20 or 1 in 25. At the last measurement in the Western Cape, it was almost 1 in 3. So people who hold capital are buying for investment in the Western Cape at the moment, even though the market outlook is not great. And presumably that is because the smart money expects that once we've had good news for the election, and once the property rates, the interest rate cycle has turned, buyers are going to spill that pent-up demand in the market, and you're not going to be able to find bargains. So people are voting with their feet. The expectation is there that the market is going to turn. If we look at buying behavior in the country in general, residential property investment purchases are now about 12%, which is a trebling of investment properties as a proportion of the market. So people who hold capital seem to have a good view. Also, this week, ABSA published their home buyers confidence index, and it seems as though home buyer confidence has increased quite significantly. And in fact, it has increased more significantly, say, in Gauteng than it has in the Western Cape. So once again, if you're not buying for investment purposes in terms of residential property, then the cap rates are not really going to bother you. You're buying because of sentiment. Sentiment is the thing in the residential market, unlike the other components of the property market that we discussed. And if the sentiment turns, it becomes a self-fulfilling prophecy.
Okay, great. So, Erwin, you're back. I'm just going to give you the opportunity just to finish off what you started there, because we've kind of moved ahead. So maybe just end off, I think, wrap up on the office, and then maybe just share the sort of the residential property cycle. We lost you sort of just at the tail end of this one, and then obviously we'd like to just cover your property cycle in the residential sector.
Yeah, I think I've said, I don't know what exactly you heard, what my last words were, But I think I've concluded on the office market. There's no doubt about it. The vacancies are countrywide about 15% for office properties, and that's a worldwide phenomenon. It's not South Africa only. So what it means is that even should South Africa now enter a boom period, it's going to take a few years for those vacancies to be mopped up. Now the same does not apply to industrial property. Industrial property has been the best performer for many years now, for at least 3 to 4 to 5 years of all the property types. And the reason for that, of course, is that industrial property is less speculative compared to office property. So we haven't had this huge oversupply developing in the case of industrial properties. I'm not showing a graph of industrial properties. Let's go now to the residential property. You'll see there's a similar long cycle in the case of the residential property, similar to what we have in the office property market. And the reason why the two are so similar is because they share something. They've got something in common. What they've got in common is the economy. It's as simple as that. And what you can see here on that graph is we had a very deep trough in 1996, 1997, thereabouts. And we all know why that was so. And then we climbed out of that trough and we had a huge boom in the early 2000s. And the reason for that boom, it was South Africa is an exporter of commodities, and we had a commodity boom. They called it the super cycle in commodities. And then, of course, like all booms, it had to come to an end. And the reason why it came to an end inter alia is because the Chinese economy started decelerating. So the major driver of commodity prices at the moment has gone, and that has got important implications for South Africa. And you can see that even in the house price cycle there, in the real terms, house prices have been tumbling ever since the COVID. Well, it was declining even before that, but now it's tumbled and it's not getting traction at all. And as you can see, the optimistic forecast, that's the blue line, that's the so-called baseline scenario. That's what we are forecasting. That's what our models are forecasting for us. And once again, the IMF scenario, the very pessimistic scenario, is the very low, the black line for the next few years. So this is the national picture. In Cape Town, it could, or in the Western Cape, it could be slightly different, but I can tell you as an example, it so happens I've just done a study in George. Now, George is a boomtown. It really is. And even there now, prices have reached such a level that in real terms, they're already declining, right? Even in George. But that's normal. That's how cycles work. As Renier also said, what happens is when prices are too high, then more supply is added by the developers, and that of course now depresses rentals at least in real terms. And when you're looking at a graph of real rentals, like you've just seen, that shows you, all other things being equal, how profitable it is for developers to start new stock. Because we deflated using the BER building cost index, which reflects building costs as opposed to the general consumer price index, the CPI. So I agree that in the Western Cape, things wouldn't be as grim as I'm forecasting for the rest of the country, but certainly based on precedent and based on our very realistic forecast, I would argue, of GDP growth over the next 5 to 6 years. There's little doubt in my mind that we are entering a period of very low growth. As you know, in nominal terms, in other words, before having taken out inflation, house prices, nationally speaking, are barely growing at the moment, right? Whereas inflation is about 5.5% or something like that. So yes, from an investment point of view, it's very dangerous to do developments at the moment, generally speaking. As a developer, as an investor, the beauty of being an investor, you can buy at a known income yield, right? Initial yield. And that you must compare with, for instance, investing in a 10-year government bonds. I mean, long bonds in South Africa are at the moment trading at something like 10.8%. Yesterday, I think it was. I mean, that's a huge income yield for 5-year, for a 10-year bond. Of course, the possible downside to that is you're taking a 10-year view on the SA economy. And who knows, maybe South Africa is going to become a second Zimbabwe or Zambia or a South American country, and inflation running away because of the fiscal cliff. That is a real risk here, right? I'm sorry, I'm good at pointing out risks. It's up to the critics of this world to point out the opportunities.
Actually, I'm an attorney, Erwin, so I'm similarly wired.
It's interesting. There was a scenario by somebody that did a comparison between Zimbabwe and South Africa, and they said, well, Zimbabwe is a landlocked country, and South Africa is not a landlocked country. And one of its benefits is the trade that it has, you know, with international trade, especially with the Suez Canal sort of closing down. And so almost that analogy, it almost throws the Zimbabwean and South African attorney to a Zimbabwean. So I've also got the optimistic viewpoint over there.
No, that's not a fair comparison. That's not apples for apples at all. And as to Owen's point about buying a 10-year government bond, one must remember that the sovereign risk is always in any risk that you take. So even if you're buying an industrial property, you're still taking the sovereign risk. And so when comparing the returns, you must consider that sovereign risk forms an element also of the risk that you're taking if you're buying an industrial property in South Africa, and then include that in the return comparison. I agree.
That's a very valid point Renier just made there. One way of looking at a nearly 11% income yield initially is that compare that to property. Let's say you can buy a house at an 8% initial yield. You know, then implicitly, in order to beat the bond yield of say 11, your property has to grow in capital value or in rental rates. It's got to grow by 11 minus 8. In other words, 3% per annum. Now, you could argue that it's a reasonable expectation, except that when we're going to have a 2% growth in GDP over the next 5 years, then all of a sudden, it doesn't look all that attractive. It's okay, but the problem with owning a property especially in South Africa at the moment, is that your operating costs are growing faster than the CPI, than the Consumer Price Index, right? So if your gross rental is going to grow, or your market rental is going to grow at, say, 3% per annum, then don't expect your net income to grow at 3% per annum, right?
Yeah. So be wary of sectional title, for instance, where the levy and the growth in the levy, for instance, has a real depressing effect. And levies have been increasing in residential sectional title developments far in excess of CPI, for reasons that are unrelated to which are sort of based on all sorts of things. And so being careful of a sectional title is definitely something that I would advocate.
But Renier, I disagree with that. It also applies to owning your own house, a non-sectional title house. There also, you've got rates and taxes, and you've got insurance, and you've got
all growing at faster than inflation.
Well, it's all kind of utilities, which obviously outpaces any.
And to come back to the Zimbabwe story, I'm sorry, I don't agree with that theory. Switzerland is a good example. Switzerland is also landlocked. I don't think landlocked. Look, in the olden days, I mean, if you go back in history, why did the United Kingdom outperform the rest of the world at that stage, 200 years ago? You can make a case there that they were not landlocked. I mean, they became an empire because of the access to the sea, and the same applied to the Netherlands, of course. you know. So that case can be made without a doubt. But at the moment, the days of imperiums are gone. So you trade. I mean,
Yeah, and you need technological superiority, right? So we're talking about things like infrastructure, which in South Africa are taking a beating. We must be cognizant of the fact that if we have declining infrastructure, we can't have a booming economy unless we have something to replace it with. So, for instance, logistics in South Africa is very difficult because we don't have a reliable rail network anymore. And the rail network also is important for our ports, and they're crumbling further. So we need for those things to turn around. We absolutely all agree, I think, on that. The question is whether we will have the political impetus now to get it done. And my thought experiment here is, let's consider the counterfactual. Let's say that Mr. Zuma quietly took his prison sentence on the chin, never started the MK party or never joined the MK party, and they didn't contest the election. If the ANC had come back and returned, say, with 50 or 52 or 55% of the votes in the current election, it would have been more of the same. And I would have certainly also had a bleak outlook, because then I think there would be nothing to make us hopeful that there is a chance for a turnaround. However, given that they have slipped now and that they're going to have to enter into these novel kinds of arrangements, I think there is at least a large cause for hope at this point, as in the country in general. But there are also, I mean, there are outperforming areas, as you say. When the Western Cape, for instance, has lower unemployment than the rest of the country by a third, just as a for instance. Not because it's governed impeccably, just because it's governed at least a modicum better than we see from the country as a whole. And I think as far as the Western Cape is concerned, one of the things that the DA wants to do in the Western Cape is they want to wrest control of the rail network from the national organs that control it. And I think that that might be something that's on the negotiating table when the coalition is negotiated. And I mean, if those kinds of things happen, if more of the control of the infrastructure is sent down the ranks to the provincial and the local governments, then at least in the Western Cape, I think we have a large cause for it, because the governance here is slightly better, which is seen in the service delivery being better than in the balance of the country. Question is, can we replicate it elsewhere? And I think, once again, considering the counterfactual, which is that we had more of the same, the ANC did not slipped in the election, then they would have had no impetus to really change their behavior. Now I think they've been given the sniffing salts, and I think they realize that they need to deliver tangible benefits. And as if they presuming that they have the mental faculties and the operational capabilities to do that, and they've not whittled that away to any large degree in the public sector, and they can, to the extent that the public sector does not have the brains trust anymore, or does not have the operational capabilities, they can rope in the private sector to fill those gaps, which they've been doing with power, for instance, then I'm very hopeful. I think our institutions are strong. The ANC has not made one anti-constitutional noise about the election being stolen or whatever, which you would expect in, I think, most other African countries. There's been no violence. I think that there is large cause for optimism in South Africa, even though people are voting for their despair. And while I agree that in the short term, you know, the outlook may not be rosy, there are pockets, and there are opportunities that are presented by this chaos, which I think the people on the call are the kinds of people who will delve into those. Buying a government bond, especially the retail savings bonds, which have, even though they're not tradable, they have larger returns, might be a better investment, but it's also very boring, right? No one has ever saved themselves rich. We need to take some risks, at least, if we hope to outperform the market, and taking those risks in a calculated manner, considering the current political climate, I think is really the name of the game. There's no such thing as buying an ETF that is based on the South African residential property market. You have to invest in a particular property, and so therein lies the rub, I think. And the same is true. The same is true to a large degree of the office and industrial properties also. You can't buy a broad exposure. You have to invest in a property, unless, of course, you're buying the listed instruments, the funds and whatever. But they also already have a significant offshore exposure. So if you're investing in a property, then location is obviously the thing, and the circumstances around the property. And I think that there are definitely pockets of excellence, even the ones you might not expect. It's not as easy as just buying an Airbnb flat in Sea Point. You know, there are other opportunities that may be overlooked.
No, absolutely. So look, I don't know where the time has disappeared. It's just run away with us. But I just want to answer the one question, and then I'm going to ask both of you just to give your final wrap. and your final thoughts. Leave some people with sort of a way forward, because we didn't manage. I mean, we could debate this probably till late this afternoon, and I think I value both of your inputs have been very interesting. And I think just facing the IMF, that the government has to face the IMF, that's really a daunting prospect. And if that is sort of rid of you, we that is really concerning, and we hope it doesn't go that way. So just one question I just want to deal with. It's got to do with load shedding, gents. So don't you think load shedding is coming back soon? Renier shakes his head. Urban, what are your thoughts on that, on load shedding, quickly before you give your wrap? You don't think so?
I'm not an expert on load shedding. I don't have inside information. I think the most likely reason for the non-load shedding that we've had now for I don't know how many weeks is a combination of both the supply side and the demand side. I think that's the most likely scenario. And if that is the case, then while maybe the worst of load shedding is maybe beyond us, because so many private sector players have now done their installed solars or whatever. But yeah, please don't ask me to.
No. That's just obviously people are looking for a viewpoint there. And I did see an announcement this morning that consumption of electricity has gone up in winter. Obviously, consumption is going to be a bit higher, so it is sort of in the red zone. And that was the latest update I have on that. And that's just from the reports from there. Last question from Bernard, and it's for you, Erwin. Why has the South African residential property market never experienced a bubble burst? If I remember correctly, that was predicted by Mr. Rudder in ± 2010 after a huge surge in pricing. Your comments there, Erwin?
I said in 2005 that we are entering a zone of overpriced market, 2005, because then at that stage already you could see in the graph that rentals in real terms were very high already. But that, of course, was only the beginning of the commodity boom. So South Africa grew very strongly for the next few years until, of course, the bubble burst in America. So this is the one point to remember. The second point to remember is that South Africa, over the past 2 decades, we've had a very responsible monetary policy. We are very, very fortunate with our Reserve Bank. They've been doing it according to the textbook. And that, of course, in that respect, we are much better than the USA, because the Fed, look, our Reserve Bank this is in the Constitution of South Africa.
So what I'm going to do, René, give us your minute sort of closing thoughts, your parting shots over here, in terms of, the way forward. What can we expect? Let's do a summary of kind of what we've discussed today, and maybe give some of the highlights. And I mean, yes, you got the more positive viewpoint. And Evan, I would have liked to hear his sum up, but I think we've kind of got to grips with what he put across, and it's not all good stuff. So maybe just give us your final wrap there.
Yeah, so I think even in Erwin's graph, it was clear that the market goes up and down. And I think in any of those troughs or valleys in the graph, it would be easy to do the inverse of how Turkey's predict Turkey population numbers in November, right? Without expecting that the trend is going to continue, but forgetting that Christmas is coming, or not knowing that the effect of Christmas on the numbers. So there are significant risks in South Africa as far as the economy is concerned, and also, globally. In America, for instance, the equity market has had the longest bull market in the history of recorded bull markets. So, that cycle is also probably going to turn at some point and have an impact on the global economy, which probably will not be a tailwind for the South African economy. There are all sorts of these kinds of things, both positive and negative, playing out in the background. But then taking perhaps a leaf from the economist Nassim Taleb. Some people will, I think, not like me calling him an economist, but the fact is that these unexpected and unpredictable events really do rule the history of the market. No one predicted the 1929 stock market crash. Otherwise, no one would have been invested in the market on Black Friday. And the same applies to all sorts of high impact events in the history of the global economy. So there are going to be high impact events, and I'm hoping that they're going to be positive. I think that there's a large cause for hope in South Africa. We've always wanted for there to be change. And the question is, how will change arrive? And the answer is, the only change that can arrive looks like the change that we're seeing now, which is the ANC dipping below 50% and having to start to rely on some realpolitik in order to get things done in the market, and also realizing that they're a waning force in the country. They're becoming a party that was established amongst the urban intelligentsia is becoming increasingly rural and increasingly a party of the elderly, the elders in society. And obviously they see that the young people are voting for Mr. Zuma and for Mr. Malema, and the ethno-nationalism amongst the Zulus leads the Zulus in KwaZulu-Natal to disproportionately vote for Mr. Zuma. The ANC will want that back. And they're going to do that by delivering tangible benefits. The NHI bill, for instance, was just a signal. There's no money to deliver on the NHI bill. There's a very long phased implementation that's not really as scary as the newspapers will have you believe. And that's the thing about the news reports also, is that they're inclined to be negative. I think I'm in the bad company of Mr. Trump when I say that, the news media isn't really to be trusted. It's not because I don't like you, Neil. It's because the fact of the matter is that things that improve very slowly over time are not newsworthy. And that is why the average person, if you read that book, Factfulness, by Hans Rosling, right? The fact is that the state of humanity, there's never been a better time to be a human. But if you read the average press report, or if you canvass opinion amongst the general population, that's not the impression that people have. And the same is true of South Africa. We've done tremendous things in the past 30 years since democracy. I mean, just the RDP housing program, for instance, the fact that we have it funded and delivered and whatever. Lots of hiccups, of course, but there is a lot to be positive about. And as we're not, for instance, in the residential property market, I alluded to this, we're not buying an ETF that's based on the market in general. When you invest in a residential property, you're investing in one granular unit of that market. And obviously, you must make sure that the circumstances around it are positive. The same applies to all other property investments. Why do large corporate companies in first world countries with developed economies divest from property? Because property returns become boring. They also divest from those economies because there are limited opportunities. Just a little bit of chaos, like you have in third world or emerging markets, creates opportunities that entrepreneurs should grab. And that's the function of the entrepreneur, is to mine the gold where you find it sticking out above the ground. And I think as far as the property market is concerned, given the political climate that we're entering, there are large heaps of gold sticking their heads up above the ground, and we should all be mining them furtively at first, and then hopefully show the rest of the market our progress.
All right, stuff. I think it's a good way to end. Evan, I see you have come in. I'm not sure whether you want to. I can see he's logged in. He hasn't showed face, but I think we're going to have to close the webinar now. So I just want to first of all thank both Erwin Roeder. He's the founder and CEO of Roeder Media and Publications, and René Kik, who's the managing director of Sentinel Homes and also Combined Finance. Thank you, René. It's wonderful having you. And before we close, I just want to remind our audience of our next events and our webinars. And next Tuesday, 11th of June, it's going to be at 7 o'clock. The topic is transforming property earnings. Who is working harder, you or your money? Once again, it's for free. We've got 3 esteemed panelists. You just click on the link below. There'll be a link dropped in right now. My colleague, she could drop that in now. And then next Thursday, we got our regular slot at 12 o'clock, and it's unlocking the potential future residential development opportunities in South Africa. We've got 2 doctors in the house, Dr. Chris Mulder and Dr. Simpiwe Madikizela and Corinne Brett Ramutla. And we welcome that discussion to see what those opportunities in those different sectors are. Once again, there's also a link. You can also go to the rei.co.za website if you do get lost. And then you'll see next to me, there's the Reside Awards. There's an award. You can actually put your phone on there. And if you are a property professional or developer or in PropTech, here's your chance to enter your company, your brand, and in the annual Reside Awards, and it's a celebration of excellence in South Africa's residential sector, recognizing leaders and innovators making a positive impact on the lives of South Africans. And the awards takes place in Johannesburg in Sandton Convention Center on Thursday, the 18th of July. There's still time to enter. There's a link. You can either use the link, which is the QR code, or you can go to the link, which is already in the inbox, or you can go to the rei.co.za website, and there you can enter. So an opportunity to really put your company out there and to demonstrate your wares and your performance. So it would be wonderful. There's nothing really out there in the South African residential sector. So we're trying to reward residential sector for everything that they have contributed. Once again, Renier and Erwin, I know Erwin is sitting in the background. Thank you for sharing your valuable insights. Your knowledge and assistance has been really helpful to our audience. We appreciate your patience, your active participation, and we hope that you not only gain knowledge, but you'll act on this very important initiative for property investing going forward and in the economy, and to know exactly how your future looks. And if you want to reach out to any one of our panelists, please reach out to us. And once again, I want to thank our team. And this is Neil Peterson of Real Estate Investor. Until next time, stay informed, stay proactive, and may your ventures in the world of real estate be fruitful and fulfilling. Take care and goodbye until next week, Tuesday, and next week, Thursday, for our next events. Thank you, everybody. Goodbye.